Good evening, friends. In the last video, I spoke about uh, the double-entry system of accounting. In this video, I am going to speak about the basic terms which are used in accounting. First one is asset. What is asset? That is, asset means which the business it is held by business. Means it refers to asset refers to the properties held or acquired in the course of business, that is during the course of business. Asset is acquired during the course of business includes both tangible, that is tangible means it can be seen, and intangible, that it cannot be seen as assets. An example of assets are building, stock, etc. Next one is liability. Liability, it refers to the obligation which arise in the course of business. Liabilities are obligation. The business has to pay in the course of the business. Not now, but in the future the business has to pay. So it is called liability, liable. It arises in past and liable to be paid in future. It arises in the past because of some activities and it is liable to pay in future. Examples of liability are loans. If you borrow a loan, you have to repay it. Creditors. That means if suppose your supplier gives you credit, you have to repay him. It is called creditor. Third one is equity. Equity refers to the owner's contribution or investment in the business. That is, it refers to the amount of money put in the business. To start a business, the owner should put some money, contribute or invest some money in the business. This money is termed as capital or equity. Equity is otherwise called capital. In accounting equation, it is the difference between assets and liabilities. Capital can be expressed as the difference between assets minus liability. Then fourth one is debtors. Who is debtors? Debtors refers to the persons from whom money is received by business. Suppose say you sold goods to Mr. X. Then Mr. X have to pay the money to you. In this case, Mr. X will be treated as debtor in your books of account. These debtors will appear in the asset side of the balance sheet. In the T-shaped balance sheet, in this T-shaped balance sheet, this is the balance sheet. This is liabilities. This is asset side. In this asset side, debtors will be there. Here creditors. This is liability side. This is asset side. Debtors. This is creditors. Okay. Fifth one is creditors. Creditors refers to the person to whom money is payable by business. Suppose say you purchased goods from Mr. X. Now X has become your supplier and you are liable to pay the money to Mr. X. In this case, Mr. X is your creditor. You have to pay to him. This creditors will appear as liabilities in the balance sheet. We saw now. On the liability side, creditor will appear in the liability side. This is a liability side. Thank you, students. We'll see in the next video.